There's a fascinating story in Axios today talking about the way Joe Biden talks versus all of his executive orders and action, because he talks like he's trying to be a centrist working with Republicans, but his executive orders and directives have been anything but, that they lean sharply to the left, and that might be a better indication of the direction of this administration. Let's explore it with Rebecca Walser, Walser Wealth Management, also John Layfield, Follow the Action founder and podcast host. John, what do you make of that some of the directives, in fact, virtually all of them that have come out of Joe Biden have been anything but centrist? So what do you make of that?
I think he's trying to appease his base, and I think that's to be expected. I think, because of the fact that you have a consolidation of power in all three branches, Joe Biden is under some pressure to lean to the more liberal part of his caucus, and I think that's what you're seeing. So far, these executive orders, you take out maybe the Keystone Pipeline, don't have a huge effect on the economy. It's more about immigration. It's more about things that have to do politically with the country. It's also a shot at President Trump, which is very popular with his base.
In looking at the orders and the 24 that have been issued, I guess they're looking, when all is said and done, by this weekend, we could be looking at 30 to 36 of them. Again, I'm not distinguishing between executive orders and just directives and executive actions, all of which sort of blur. But the one thing I'm seeing from them, Rebecca, is an indication that he want to hit the ground running. He's a big fan of FDR, the busy 100 days. But a lot of these actions are repelling Republicans with whom the president said he would work. If he's going ahead and doing things unilaterally, this would seem to indicate that maybe his actions and words aren't quite meeting.
That's definitely a way to put it, Neil. I agree. I'm deeply concerned about the energy steps that he's taken, not only to kill the Keystone Pipeline, which we know eliminates 1,000 union jobs immediately, but also rejoining the Paris Climate Accord. And also the Washington Post confirmed yesterday that his administration is going to, in fact, ban fracking. Now, we haven't seen that executive action yet, but that's what the Washington Post confirmed yesterday. So, these are massive changes on the energy sector that will impact the economy really directly, very quickly. And, it concerns me specifically about the Paris Climate Accord because the Obama State Department found 5 different times that there wasn't an increase in greenhouse gas emissions. And that is it's just something they don't want to do. They just don't want to transport crude down to get refined from Canada to America, even though it's happening by rail and by, train now. So, yeah, Neil, this is really, now that he has 2 blue houses of Congress, this is a little bit more less than let's stretch out across the aisle kind of Joe that we thought we might get.
Let's talk a little bit about the big measure he has coming down the pike in this $1.9 trillion stimulus plan, John. Now, Republicans are balking that it's way too pricey. You don't need that much. Progressives, oddly enough, within the president's own party are saying it isn't generous enough, that they'd like to see even bigger stimulus checks going out to Americans. So he might be getting it from both sides. Now, let's say this is dramatically pared down. Not that we don't see new stimulus, but it's not 1.9 trillion. It might not be $1 trillion. How would the markets deal with that? They seem to love, government stimulus of any type these days. So gone are their concerns for deficits and debt. But what do you think?
Yeah, no one seems to care about any debts and deficits until they're the minority party. So both sides have been very bad about debts and deficits, but the market does expect a big budget outlay here coming from the Biden administration. And if they don't get it, I think there's going to be trouble because you look at where the market is going to be, say, 6 months from now. We should have a safe bull market for the next 6 months because of government stimulus, because of the Fed, because of low interest rates. Then you're going to have an intersection of structural issues that have come out of this pandemic. You have 9 million jobs that have been lost because of the pandemic. Those 9 million jobs at that point, 6 months from now, the unemployment benefits are going to start to run out. And does the vaccine and herd immunity kick in quick enough to create jobs for all of those people? That's going to be an interesting dynamic that we have in that period at, say, 6 to 8 months from now. That's what the market is looking at going forward. I mean, why else would you have, say, Carnival Cruise with no income coming in for the foreseeable future has tripled off of its low to about $20 billion valuation. People are looking into the future as far as the market and thinking that we're going to get, once we get herd immunity, this stimulus will get us there with those 9 million people. That's to be seen.
You know, a lot, I think, guys, really depends on the direction of the virus here. Depending on who you talk to, the trend could be our friend. The 7-day moving average of this, which is a reliable read, is the lowest it's been in about 8 weeks. Others are seeing, light at the end of the tunnel in Europe, where lockdowns in a good many countries remain in some stage of effect, so that we could be going through the worst of it. There is always a delay, hospitalizations and tragically deaths as a lagging indicator. But if that is the case, Rebecca, and I know a number of doctors work around the consensus of April or May being a turning point, which we're through the worst of it, and people start appreciating that, then what?
That's exactly it, Neil. And I think that, we can stimulate temporarily, but we really now have to start to look at, we started stimulation last March 2020, and in literally less than a year, we have $6 trillion of federal funds before Biden's actual plans that are now going to be an additional maybe $2 trillion or we'll see. But the point is, if you look at total federal debt, Neil, of literally just under $30 trillion, $6 trillion in less than 12 months is just flatly unsustainable. And so what I really am looking for this administration to lay out for us now is, what is the plan to recapture the economy specifically and actually reopen in the midst of new strands, in the midst of the virus rollout, because the vaccine rollout, we cannot stimulate indefinitely. And I know the market likes it. I know the market gets relieved when we see stimulus, but really we have to start saying this, and I totally agree with John, this is on both sides. We had a massive amount of spending on the Trump administration, and we just can't afford it, especially this decade with the retirement of the baby boomers, which is a whole nother monkey wrench that nobody's even discussing. So we really have to get a handle on what is the economic plan with the virus moving forward, because stimulus cannot be indefinite.
All right, what are you talking about? Baby boomers retiring? Not so fast, young lady. All right, don't wander too far, guys. We're going to have you back in a few minutes talking specifically about the president's intentions to shut down that Keystone Pipeline.